So you'll see here, known departure, non-GAAP, standard first, second, third. Notice the conclusion, auditor's conclusions adjusted, because normally we say, based on our review, we are not aware of any material, well, now we became aware of a material modification. So we'll say, based on our review, except for the issue noted in the known departure from accounting principles generally accepted in the United States, paragraph, then just like normal, we are not aware of any material modifications that need to be made, blah, blah, blah. So what you'll notice here is that we're actually saying that we, except for, we are aware. So what we need to do is note that that's what we're adding. You'll see that in bold based on a review, except for the issue noted in the known departure, and then the next thing is the other paragraph, which says, the known departure. And remember, you can call it emphasis of a matter, you can call it known departure. It says accounting principles generally accepted in the United States require investments be available for sale at market, but they chose to do it at cost. That's the same thing we did earlier for the example for the compilation. If the accountant does not believe that the disclosure adequately describes it, you always have the option to do what? Bye, withdraw. The accountant may be engaged to review comparative statements. A GAAP departure was remedied. So changing reference from last year, we did this report in a compilation. First, second, third, fourth are standard. All we're doing is just adding an extra paragraph where your other matter paragraph after. What does it say? In our report dated, blah, 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 about praised values, and that the report is different. Referencing the use of accountant's review report. So your special purpose framework, in some cases where the framework is not widely known. So we have contractual basis of accounting. In either case, these should be restricted distribution. So that talks about when you're going to restrict its use, so it's not necessarily for the general public. So you'll see, for example, on the next page, special purpose report framework, contractual basis. When you're doing contractual basis, we're going to restrict the use. So we have reviewed the accompanying special purpose statements of revenues and expenses, management's responsibility. We're going to mention about section 3 of the loan agreement, accountant's responsibility. These are all similar paragraphs. We're just adding a little bit. Accountant's conclusion, based on our review, we're not aware of any material modifications should be made to the accompanying statements, special purpose statements, in order for them to be in accordance with the basis of a theory pursuant to section 3 of the loan agreement. Basis of accounting. We draw attention to note G, we're going to mention what footnote, to the special purpose statements in which describes the basis of accounting. The accompanying special purpose financial statements are prepared for the purpose of complying with section 3 of the loan agreement, which is the basis of accounting other than GAAP. Then here's your restriction. The report is intended solely for information and use of boards or directors or managements of the company's first bank. It is not intended to be and should not be used by anyone other than those parties. That is our restricted use. We don't want it to fall into the wrong hands. It is limited use, restricted use only. Going concern considerations, same thing that says, hey, I don't know if you're going to be around next year. That's a going concern doubt. We would add an extra paragraph. Subsequent events, same kind of thing. There may be an event that occurs after the balance sheet date. At that point, you might either date the report as of the subsequent event, or you could dual date the report, just like we talked about in auditing. If you want to emphasize a matter, again, whatever that matter may be, we could add that extra paragraph. It talks a little bit about the work of other accountants. So maybe another accountant audited, reviewed a subsidiary. If you want to take responsibility versus if you don't want to take responsibility, then we would make reference in the report. Supplementary information, same kind of concept. We would add an explanatory or other matter paragraph in order to mention either that supplementary or some of that RSI, which is required supplementary information. Finally, there are certain circumstances that require the accountant to withdraw from the engagement without issuing a report. They include a limitation by the client on the scope of their inquiries. So all we're doing is inquiry and analytical procedures. But if they're restricting our scope, then we're going to have to withdraw. Departures from GAAP that are so numerous or extreme as to make modification of the report inadequate, or the client refuses to provide a rep letter, right? That's when you go, hey, I'm out of here. Finally, a client occasionally requests the accountant to perform a compilation on a balance sheet. Oh, remember we did that in audit reports. If they want a limited reporting engagement, they go, hey, I only want a review for a balance sheet. Why? Because I'm getting a bank loan. And the bank said, just give me a review balance sheet. Okay, they want to see I have assets to support the money they're loaning me for collateral. Okay, fine. Then guess what? Can you do it? Yes. Is it a scope limit? No, as long as they give you access to everything it is that they were looking for. All right, so that's a lot of material, but that, my friends, is a review. Then in a minute, I'm going to go back through and we're going to look at the differences between all the way from a preparation engagement, compilation, review, and I'll even throw an audit in so you can have a clear understanding in your mind of the distinctions between all of them.